this is PPI. We get CPI next week. Some of it's base effects, other parts of it's not. Mohamed, how do you anticipate people will respond to this? And this, I guess, is a question not just for the economists out there or the market participants, but also for the psychologists too. How we respond to that data when we actually see it is different to how we respond as we anticipate it.
Yeah, so if conditions weren't what they are today, we would wait. We would wait to see whether this inflation is indeed transitory or not. But as Ken Rogoff pointed out in your show earlier today, the system right now is not prepared for an interest rate shock. And that's the issue, is that we have gotten used to very low interest rates, very well-behaved interest rates. Why? Because our main problem was inflation is too low. Now we're seeing a change in that paradigm. So the problem, John, is that the initial conditions are all based on very low interest rates for a very long time. And what we may get is a different outcome. And that's why the market reaction function may be very different from the economists and the Fed. Reaction function.
This takes us to the really important conclusion of this conversation, Mohamed. It's where your ultimate concern lies, and it's not around the inflation debate. It's around financial stability. Can you paint the picture for us?
You know, John, we've lived in this wonderful environment for investors of ample and predictable liquidity, extremely loose financial conditions, and confidence that this paradigm will continue. It has been the most favorable liquidity paradigm that I have seen for the marketplace in my career. And it has benefited investors enormously. And when you have that, it is normal to take more risk. You are encouraged to take more risk, and there will be excessive risk-taking. We've had examples of that this year. So the concern is, if the liquidity paradigm changes, do we expose these areas of excessive risk-taking or not? And that is something that people have to keep a real close look and a close eye on, is the extent to which the system has taken more risk than what would be warranted by what's going to happen to financial conditions.
So let's finish there. I think typically, as a journalist, you're almost tempted to ask the when question. I always think the when question is kind of pointless. Let's talk about the signpost you'd look for, Mohamed, that would actually give you that concern that something sinister was just around the corner. What are those signposts?
One word: flows. Keep an eye on flows. So far, flows have been mostly in one direction, into the marketplace. If we see flows hesitate, this is a market that needs more and more flows. Look what's happened to the SPAC segment in the last few days when there's been questions about flows. So flows, just keep an eye on flows.